In today's show, I'll be breaking down the latest Bitcoin technical analysis. Also, BlackRock's Bitcoin ETF officially breaks $18 billion of inflows since their launch on January 11th. Like, whoa. And quoting the high priest Bitcoin, Max Keiser, Bitcoin unalives the state. My TED Talk in 3 points. Number 1, money existed before the state. Number 2, Bitcoin separates money from state. And number 3, Bitcoin unalives the state. We'll also be discussing the latest with Bitcoin speculators hodling 2.8 million worth of BTC, or I should say 2.8 million BTC in the worst performing price cycle thus far. We'll also be discussing MicroStrategy planning a 10-for-1 stock split to boost accessibility. I'll be breaking down the details from Mikey Saylor, as well as crypto voters are bipartisan and desire to update the system, according to Coinbase. We'll also be discussing CFTC chairman reiterates Bitcoin and Ethereum are commodities. And in a testimony, we'll also be discussing Bitcoin to hit $500,000 on upcoming stocks and gold crash, according to the high priest Max Keiser, quoting him here. 1987 style crash coming. Bitcoin, the ultimate safe haven, will soar past 500,000 per biddy. Gold will continue getting demonetized by Bitcoin. Bitcoin ETFs will get seized by the U.S. government. And 1 million middle and upper class migrants will flood to El Salvador. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Welcome everyone to the YouTube channel or to the live stream. If you're new, very important to smash the likes and subscribe. It helps out a lot. And also, if you can repost this over on X, it's greatly appreciated. Today is pod episode number 1697. I'm your host, JV, and it's July 11th, 2024. Let's go. 11/11. I'm rocking the 11 thanks to Crypto Surge. Shout out Crypto Surge. And it is the 11th here today. So that's another divine omen for you guys. But anyways, let's kick it off with our market watch, as we do each and every day. You can see Bitcoin in the green, actually above 57.5, currently on Coin360. Ether back in the green, above 3,100. XRP Cardano in the green, while Solana, AVAX, and Polkadot are correcting and in the red. And checking out CoinMarketCap.com for the latest data. We'll dump here. We have Bitcoin market cap at $1.1 billion. The crypto greed and fear index is currently sitting at a 40 out of 100. Come on with the data. And the total crypto market cap is 2.13 trillion. And this is as per coinmarketcap.com, live and in the flesh. 24-hour volume, roughly 66 billion, meaning we're up roughly 5% on the day for the total crypto volume, with the Bitcoin dominance at 53.4% and the Ether dominance at 17.6%. And checking out the top 100 crypto gainers for the past 24 hours, we got Mantra up 11.5%, Stacks up 6%, and Near Protocol up 6%. Below that, we got Filecoin, Safe, and Arweave. Let me know, fam, which alts are you most bullish on for this particular bull? Holla at your boy. And again, actually, we're down to a 29 according to the official crypto greed and fear index. According to CoinMarketCap, we were a 40, so I guess it's what data points we're going to take it from. But nonetheless, yesterday was a 28, last week a 44, and last month a 74 in greed. And checking out the crypto bubbles, just to get a visual perspective really quick, you could see maybe 60% of the market back in the green on the day. And zooming out on the monthly, unfortunately, still 95% of the market wrecked city. And there you have it, family. So here we go. Let's discuss the latest Bitcoin technical analysis, aka astrology for the broskies. And we'll even look at some of the live charts so you can see some what's happening right now. So here's a 15-minute chart. Bitcoin spiked to a 1-week high, actually, today, July 11th, as U.S. macroeconomic data delivered a bullish surprise. We did surpass 59 Gs, 59.5 to be more precise, according to Bitstamp. This followed the June print for the CPI, which showed inflation slowing beyond expectations. Year-on-year and month-on-month CPI both came in 0.1% lower than the forecast, leading to a positive reaction across both crypto and U.S. stock markets. Quoting the U.S. Bureau of Labor Statistics, the all items index rose 3% for the 12 months ending in June, a smaller increase than the 3.3% increase from the 12 months ending May. And the all items, less food and energy index rose 3.3% over the last 12 months, was the smallest 12-month increase in that index since April of 2021. But also consider they fudge numbers and they can give you data points to ultimately pretend they have inflation under control at 3%, which is precisely what they intend to do. But I digress. Nonetheless, the initial gains proved short-lived, with Bitcoin quickly erasing the 1,000 it had initially added, unfortunately. Quoting crypto analyst Jelly, inflation coming down faster than expected. Local higher high for Bitcoin in response. Time to let the dust settle, but safe to say it is much stronger than it was at the start of the month. Reclaim 60 Gs and things will look much better. So that's the hurdle we need to get back above, family. 60 remain the key level on the radar for market participants, with fellow trader Wolf identifying this as the target for a resistance flip. Quoting him here, the 60 to 61.6 range is where the strongest resistance lies due to horizontal and weekly 21 exponential moving average barriers. And he also shared alongside the chart, if this level is cleared, the bulls will regain control. So let's freaking go. Shout out to my bulls, by the way. Now, other important lines in the sand within the Bitcoin bull market include the 200-day moving average and the short-term hodler cost basis. The latter still high above the spot price, just above 64,000, as per data from on-chain analytics resource. Look into Bitcoin. Meanwhile, the short-term hodlers, the name given to the more speculative and the end of the Bitcoin investor cohort, held up at 2.8 million BTC at a loss when the price hit a 4-month low of 53,500. Now, let me know if you feel that the low is in, and that was the low, family. We recovered pretty nicely since then. The mood overall remained cautious as markets anticipated the start of the distribution of coins belonging to creditors of defunct exchange, Mt. Gox. For example, we have Zen, the commentator, who suggested that a Bitcoin price nuke could still result as funds hit the exchanges, with 2 days required for the market to rebalance itself. That view also held beyond trading circles, with Jamie Coutts, chief crypto analyst at financial services firm Real Vision, arguing it would ultimately be a cathartic process. Quoting him here, while painful for the short term, the distributions of the Mt. Gox reserve and government sales remove the annoying supply overhang, helping distribute coins to a wider array of holders, thereby growing the network and leaving Bitcoin even better off than before. He also referenced the ongoing Bitcoin sales from the German government, which you can see clearly on your chart here. It shows you the Bitcoin exchange reserves with Mt. Gox, and you can see that in the orange, or actually in the blue. The orange is just the Bitcoin level 1 supply. So there you have it. And in other news, BlackRock's Bitcoin ETF officially breaks 18 billion. Wow, on their 6-month anniversary. Now thinking about it, the ETFs officially went live here in the States January 11th, and today is July 11th. Correct me if I'm wrong, but that's 6 months. So they've achieved 18 billion worth of inflows since their launch, and they did that in 6 months, which is truly mind-boggling. And quoting the high priest of Bitcoin, Max Keiser, Bitcoin unalives the state. My TED Talk in 3 points. Number 1, money existed before the state. Number 2, money separates money from the state. And number 3, Bitcoin unalives the state. And we use the word unalive because we're on YouTube, just FYI. He uses a more sexier word. President Bukele gets it. He's reinventing the state. He knows that everything goes to zero against Bitcoin, and that was off the back of the German government selling 76% of its Bitcoin, with their holdings now down to only 13,000 Bitcoin, which is roughly 767 million. So that's all the German government has left to dump. And as you can see here, only 0.26% of the global population can be a Bitcoin whole coiner. So if you're a whole coiner, make some noise for yourself and give it up, because it's a pretty incredible accomplishment considering the finite limited supply of Bitcoin on planet Earth. And this chart speaks wonders. So there you go. Now let's check out some of the live chart price action. There's so much action on this 1 hour chart. It's almost mind-boggling, family. It's kind of wild. I mean, check this mofo out. This is brought to you by TradingView via Coinbase. There's just so much going on. Thank God I'm not a technical analyst just making stuff up off the top of my head like everyone else. So yeah, let's look at some of these targets. We have a target sitting all the way north at 63,500 on the 1 hour. We do have a falling wedge formation. There's all these other formations. I've never seen the 1 hour chart this wild. We do have some targets though on the downside we got to keep in mind. One all the way down at 52,000, and there's a tons of targets in between. But they say when in doubt, just zoom out. Let's go to the 4 hour and we'll continue zooming out a little more. So here we go. This is the 4-hour chart. We do have a couple of tops sitting at around 61,000 top targets, and we do have a bottom target sitting at roughly $54,500. Let's zoom out a little further. We'll take it to the 1 day. This is a 1 day chart. You can see we've had some green candles in the past couple of days, followed by itty bitty reds. But we'll see if we continue to pump. 60 is clearly the hurdle we need to get back above, which is another psychological level. But we do have a target to the south here on the 1 day chart, all the way down at 47,700. Keeping in mind the local low of the recent months we tapped the other day at $53,500. Let's zoom out a little further and look at the 1 week chart. And you can see looking extremely bullish here. I love this chart. The bullish flag formation breakout. We do have a target at roughly 89, 90,000. And then we have a very bullish target just shy of 120,000 for a bullish flag. Overall, the 1 week chart looking extremely sexy, in my humble opinion. Let me know your thoughts. And let's check out one more. We'll check out the 1 month. Again, live and in the flesh, live chart action, Jackson for you. And you can see the monthly chart extremely bullish as well. Yeah, we had a couple of tiny itty bitty red, months just more recently, but prior to that, we had a pretty impressive run up. We had 7 consecutive monthly green candles. Then we got finally the correction followed by green, and then 2 itty bitty red candles. So we'll see how we continue for the month of July. But there you have it. Crypto fam, let me know your thoughts on where you stand and where you feel the Bitcoin price action likely trending next. Let's get right into our next story of the day. 2.8 million BTC, according to the headline. That's the Bitcoin speculators. That's how much BTC they're currently hodling. That's right. Bitcoin long-term hodlers, where you at, are refusing to sell in the current Bitcoin price cycle's deepest correction. That's because they have a brain. Why would you be selling at a time like this? I digress. Bitcoin may be experiencing its heaviest drawdown of the current bull market, but its diamond hands, where you at? Diamond hands and laser eyes are not panicking. For Glassnode, if we look at the performance index to the date of the Bitcoin halving, we see the current cycle as one of the worst performing. This is despite the market breaching to a new cyclical all-time high prior to the halving event in April, which was the first time this has happened. Now, in contrast to some well-known capitulation events in Bitcoin's recent history, Glassnode shows that the long-term hodlers are sitting on their BTC. Even the recent trip to the 4-month low of 53.5 for Bitcoin failed to shake their resolve. That's right, quoting them again. Looking at the losses locked in by both long-term and short-term hodlers, we note that the loss-taking events this week account for less than 36% of the total capital flows across the Bitcoin network. Major capitulation events such as the September 2019, March 2020, and the sell-off in May of 2021 saw losses account for more than 60% of capital flows over a period of several weeks, with a meaningful contribution from both cohorts. Long-term and short-term hodlers refer to the Bitcoin wallet entities hodling a given unit of Bitcoin for more or less than 155 days, respectively. The latter term reflects the more speculative end of the Bitcoin investor spectrum. Meanwhile, Glassnode produced a chart showing the distinct absence of long-term hodler participation in on-chain selling at a loss during the Bitcoin price drawdown. Quoting them again, following 18 months of up-only price action after the FTX implosion and 3 months of apathetic sideways trading, the market has endured its deepest correction of the cycle. Nevertheless, drawdowns across our current cycle remain favorable when compared to historical cycles, suggesting a relatively robust underlying market structure. Now, weeks to go until the Bitcoin price turnaround. Well, let's discuss it. At the 53.5 low we recently breached, short-term hodlers held nearly 2.8 million BTC, which is 14.2% of the total supply at an unrealized loss. Miners, too, are causing concern with the hash rate capitulation phase continue ongoing, reminding the long-term market observers of the events leading up to the bear market bottom, late 2022. Quoting them again, my biggest drawdown since the FTX fraud and collapse to 15,000 was preceded by the hash ribbon capitulation signal, which fired mid-May. That's according to Charles Edwards, of Capriole Investments. So there you have it, yo. Do you feel it could just be a couple of weeks away until the market turns crazy bullish again? Next story of the day, let's discuss the latest from Michael Saylor and MicroStrategy with their new plan. This is actually pretty interesting. MicroStrategy plans a 10-for-1 stock split to boost accessibility. That's right. The NASDAQ-listed business intelligence firm MicroStrategy board of directors announced a 10-for-1 stock split of the company's Class A and B common stock July 11th. MicroStrategy said the stock split aims to increase accessibility for investors and employees. The stock split will be executed as a stock dividend, which grants stockholders of Class A and B stocks 9 additional shares per share owned. The shares are expected to be distributed after trading closes August 7, 2024. Meanwhile, trading on the split-adjusted stock will commence August 8th. Despite the split, the voting rights of the stockholders will not be affected. And within the announcement, the publicly traded firm also said it considers itself a Bitcoin development company. My apologies. That'd be ironic. It's a country now, but no, it's a company. The company said is dedicated to developing the Bitcoin network through its activities within the financial markets. The firm highlighted that it had accumulated Bitcoin as its primary treasury reserve asset. The approach underscores the company's commitment to integrating Bitcoin into its strategy. According to MicroStrategy, here you go. As an operating business, we are able to use cash flows as well as proceeds from equity and debt financings to accumulate Bitcoin, which serves as our primary treasury reserve asset. There is no second best. The company also dived into AI, software analytics solutions, besides its Bitcoin initiatives. The new development comes as the company revealed plans to buy more Bitcoin. On June 13th, MicroStrategy unveiled this plan to conduct a $500 million stock sale to purchase more of the biddies. The firm also announced that it intended to offer convertible senior notes due in 2032. One day after the announcement, the company announced it had increased the volume of its stock sale to $700 million. And on June 14th, MicroStrategy said the notes would be sold to qualified investors, and a portion of the process is allocated to adding more Bitcoin to its treasury. Ultimately, the sale reached almost $800 million, with $786 million used to purchase almost 12,000 Bitcoin. With its latest Bitcoin purchase, MicroStrategy now holds 226,331 BTC, worth roughly $13.2 billion. And there you go. Mikey Saylor again for the win. But anyways, fam, let's continue. I still got a lot to share with you guys. Here's the latest with the Bitcoin voters who are bipartisan and desire to update the system. Well, at least according to Coinbase's more recent study they released today on July 11th, revealing that crypto voters in particular are going to make a big difference in the key races, with 1 of 6 crypto owners living in the 7 key battleground states. And my question for y'all, are you going to be voting for this election? And if so, who you going to be voting for? Is it going to be Trump? Is it going to be Biden? Or is it going to be RFK Jr.? Let me know, family. I appreciate your thoughts on that. And like I said, I'll read these comments more so out loud from you guys when I finish the rest of the story. Just resetting my camera, which was being glitchy. But yeah, anyways, as you can see here, Coinbase actually made this post. 1 in 6 crypto owners live in 7 key battleground states. Now, according to the study, crypto voters are younger and more diverse, with Gen Z and millennials making up 65% of the registered voters who own crypto. That's right. Now, amongst the registered voters, 40% reside in the swing states, those states that could be won by either a Democrat or Republican candidate. Registered voters who own crypto make up 35% of the non-white voters, making the pool of crypto voters a diverse bunch. Not only are these voters younger and more diverse, but they were also revealed to be active in the political race, with 9 out of 10 registered voters that own crypto likely to vote in November 5th election. Moreover, those voters said they were 4 times more enthusiastic about voting for a pro-crypto candidate than not. And let me express the obvious. Sleepy Joe is anti-crypto, anti-Bitcoin. Trump is pro-crypto, pro-Bitcoin. So I think that means obviously 4 times more people are going to be voting for someone like Trump versus Sleepy Joe. This group of voters also proved to be more bipartisan, with 35% claiming to be Dems, 34% Republicans, and 31% saying they are persuadable about the party to which they belong. The statistics were similar amongst registered voters holding crypto in swing states, but overall the crypto voters are eager to see a candidate who supports the industry with more innovative and pro-crypto outlook. And let's not forget, Trump is going to be speaking at the big Nashville, Tennessee Bitcoin conference. And I think just because he's going to be there, the attendance is going to be through the roof. How many of you are going to be there? Let me know, family. Now, initially, the Republican Party candidate and former President Trump appeared to be more crypto-friendly, though his motives have been questioned. The Democratic Party nominee, Sleepy Joe, has taken some heat from the community for initially not being as pro-crypto. No, he's anti-crypto. So let's not say he's not as pro-crypto. He is anti-crypto, anti-Bitcoin, enemy of Bitcoin, enemy of crypto. That's Biden, Senator Warren, Gary Gensler, Janet Yellen, Miss Binance, and the rest of their goons, referred to as the Three Stooges by Rich Dad. But I digress. We also have RFK Jr., the first presidential candidate to accept campaign donations in Bitcoin, and Donald Trump have both pledged to oppose the development of a central bank digital currency in the States. So just say no to CBDCs. But anyways, fam, next story of the day. Let's get right into it. Here's the latest from the CFTC chair, reiterating that Bitcoin and Ethereum are both commodities. That's right. The U.S. commodities regulator chief has again argued that Bitcoin and Ether, obviously the two largest cryptos, are commodities, and his agency should be given oversight of them. Do you hear that? No Claire Gary Gensler of the FTC. Now, speaking on July 9th before the U.S. Senate Committee on Agriculture, Nutrition, and Forestry, the CFTC chair, Rostin Benem, argued that a recent court ruling in Illinois stated Bitcoin and Ether are commodities. The July 3rd ruling was a part of a $120 million Ponzi case involving an Oregon man accused of fraud. In the order, the Illinois District Court judge said that both assets qualified as commodities. So it was an official ruling. It is also said that Olympus and KlimaDAO qualified as commodities too. I've never even heard of these coins. But anyways, quoting them here, its decision, the court reaffirmed that both Bitcoin and Ether are commodities under the Commodity Exchange Act. Additionally, he cited the 2022 report from the Financial Stability Oversight Council, which highlighted a gap in regulation of the spot market for digital assets that are not securities, and called for his agency to assume a greater position of oversight for digital commodities. He said ongoing inaction from other regulators in the U.S. would not squash public interest for digital assets and would only result in greater risk to financial markets and investors. In short, our current trajectory is not sustainable. Federal legislation is urgently needed to create a pathway for a regulatory framework that will protect American investors and possibly the financial system from future risks. Now, the CFTC chair outlined 5 key legislative priorities he believed his agency could introduce to better regulate digital commodities. These included his agency's ability to tailor rules to meet the unique risk profile of cryptocurrencies, a permanent fee-for-service funding model requiring registrants to adhere to a comprehensive disclosure regime regarding their crypto assets, as well as bolstering know your customer and anti-money laundering privileges for the CFTC. Now, finally, he urged that the committee to consider a disciplined, balanced framework for whether or not tokens are deemed commodities or securities under existing law, as well as working to introduce a comprehensive education and outreach program concerning crypto assets in the U.S. Quoting him here, the SEC and CFTC have a long-standing partnership that facilitates strong, robust regulation of securities and derivatives markets. I am confident that the two agencies will continue working closely, ensuring a reliable, fair, and efficient system for listing and trading of digital assets on regulated exchanges. So there you have it. Now, clearly, if it was up to No Claire Gare of the FTC, the chairman over there, he wants everything to ultimately be deemed a unregistered security so that they have jurisdiction over it. And the CFTC is ultimately saying, hey, Bitcoin and Ether are commodities. So Gary, you don't have jurisdiction over here. This is our playing field. And they're fighting over that battlefield right now. But anyways, fam, now for our featured story of the day. Bitcoin to hit 500,000 per coin on the upcoming stocks and gold crash, according to the high priest of Bitcoin, Max Keiser. Let's actually start with some of the tweets he shared. 1987 style crash coming. Bitcoin, the ultimate safe haven, will soar past $500,000. Gold will continue getting demonetized by Bitcoin. Bitcoin ETFs and domestic Bitcoin miners will get seized by the U.S. government. 1 million middle and upper class migrants will flood into El Salvador. You have been warned by the high priest, and in my opinion is a prophet, because back in 2011, him and Stacy via the Keiser report were the first ones to cover Bitcoin internationally via RT, via the Keiser report. We need to bring back the Keiser report. But nonetheless, I mean, many of Max's predictions have come true. Back when Bitcoin was $1, he's been telling us to buy it. What is it up today? Something like 50 million plus %. So I'm just saying, if he says 1 million middle and upper class migrants will flood into El Salvador, I treat that very seriously. And if he says Bitcoin ETFs and domestic Bitcoin miners will get seized by the US government, I also take that warning very serious, because I understand the intentions behind the corrupt government of the United States. And they can do that in the name of national security and get away with it. They've already done a Gold Seizure Act back in 1933, so I wouldn't put it past them. BlackRock is accumulating crazy amount of Bitcoin right now, as I shared earlier. Check this out. They officially broke 18 billion worth of inflow since launching 6 months exactly today, as today is July 11th. They officially launched back on January 11th. So is this a master plot for them to seize the majority of the Bitcoin that they can via, Coinbase, who is the custodian for BlackRock? Let me know your thoughts on that. I'm going to read you another quote from Max Keiser. Iran has already got 3% of the global hash rate. So now I think Venezuela will get 3 to 5% pretty quickly. And then at some point, America will say, we have got to enter the 21st century space race of mining Bitcoin. And then they'll try to seek 20% of the hash rate. And then security goes up dramatically. And the price goes to $400,000, $500,000 per Bitcoin. Let me know if you agree. And also, he more recently tweeted just the other day, the only project 2025 I am aware of is Bitcoin breaking $350,000 per coin in 2025, ultimately saying, no ish coins, fam, only Bitcoin. He is the one and only high priest. So there you go. And let's dive a little deeper into this article, which was published regarding his 500,000 price prediction. And by what year do you speculate a Bitcoin to hit $500,000 per coin? Holla at your boy. And at the end of this article, I'll read some of your comments. So yeah, vocal Bitcoin advocate and financial journalist Max Keiser has published an ultra bullish post about Bitcoin, predicting the Bitcoin price to likely soar past 500 G's, baby. Keiser believes this is possible since he also predicts a major crash for the US stock market, not seen since the end of the 1980s. Crazy. Keiser seems to be expecting a massive stock correction as the market has again reached its peak. Let me know if you agree with that. Bitcoin will surpass 500 G's. That's right. As I just shared you his quote, the tweet states that now the top 10% of the stocks on the market are the most concentrated since the Great Depression, roughly 75%. The Keiser letter points out that even in 2021, with the dot-com bubble peak, the concentration was lower, compromising approximately 72%. And here's the actual post from the Keiser letter. The top 10% of the stocks in the U.S. now reflect 75% of the entire market. This is by far the most concentrated stock market since the Great Depression in 1931. In the dot-com bubble of 2001, concentration of the top 10% of the stocks peaked at roughly 72%, even prior to the 2008 financial crisis. That's right. Before 2008 financial crisis, he noticed the concentration of the top 10% stocks showed a smaller peak compared to what can now be observed, which is roughly 66%. So on average, the top 10% of the stocks reflect 64% of the entire stock market. Pretty much. And based on this, Keiser made a bold prediction that Bitcoin will profit from the stock market crash, soaring past $500,000 per coin. He expects the stock market to crash similar to the way it did in '87. Now, let's get back to the topic of the U.S. government seizing the biddies. Bitcoin in the U.S. will be confiscated by the U.S. government. Keiser believes both from the spot ETFs that have been trading since January 11th and from the local miners as well. Gold will continue to lose value against Bitcoin, and funds will go from gold into Bitcoin. A few days ago, Keiser already shared that investors had started to withdraw money from the gold ETFs and send it to the spot Bitcoin ETFs. Thus, Bitcoin is demonetizing gold. That's right. It's all going to zero against BTC. But yeah, let me know your thoughts with some of these predictions, including Bitcoin soaring to 500,000 on the back of a 1987 style crash of the stock market. And what are your thoughts on the U.S. government seizing the Bitcoin ETF, BTC? Right now, Coinbase, I believe, has over 1 million, right? 1 million biddies, which is, if I'm to speculate, I'd say 5% of the Bitcoin circulating supply. What if the government is plotting a takeover? What if they let the asset managers accumulate mad Bitcoin ETF BTC for the next, hypothetically speaking, couple of years, and now they have 10, 15, 20% of the circulating supply of the biddies, and then a simple executive order from the United States president says these are to be turned over to the U.S. government in the name of national security. What do you think would happen then? Do you think the government would do something like that? Do you trust your government? Let me know your thoughts, fam.